Hey, welcome back to the Springs Radio Real Estate Show. It's Cheryl Garlock with Colorado Front Range Properties. My guest today is Martin Burlingame with the Burlingame Insurance Agency. Welcome to the show again.
Well, welcome, and I'm always enjoy coming to this show every month.
Well, that's good. I'm really glad that you are here. And, you know, we were just shooting the breeze, so to speak, about homeowner associations. I was just having that little conversation about that and some of the liabilities. And, you know, you really did bring up a huge, huge point that people often do not think about when they purchase a townhome or a condominium or something that involves an HOA. Now, that's being said, you can have HOA complexes, and many single-family developments do have HOA complexes, but it's not really quite the same thing. In the area of insurance, though, where it's an attached unit,
yes,
that's where this is a big, big problem here, because you don't often look at the blanket insurance. You just figure, okay, the HOA is absorbing that cost. Well, what if they don't have the money? What if they haven't got the deductibles stashed away? Some other things are issues, aren't they?
I mean, we insure across the country, like I've told you before. We had one come in one of the faraway states,
yes,
where economy isn't as good as it's going in Colorado. And the board forgot to buy their insurance last year. And so now they're coming up on a year, and condo insurance is getting tougher.
Yes.
There's been a lot of claims out there for the associations as a whole, and now they have no prior insurance.
Oh, yeah, it's kind of like health insurance. They have prior coverage.
Well, and again, modern technology, you can Google, and when you Google this complex, there was a meth bust and there was a murder. It's a big, huge complex. Now, in the overall scheme of the number of units, in a 3-year period, that happens, right?
Yeah.
I mean, it can happen when you have a tenant, and we've talked about the meth before, which is not a good situation. But when you're the insurance company and you're Googling nowadays, because they go Google Earth, they look at the roofs, they look at the angles, they look at the sides, they can see everything on an insurance from the agent and the company. I'm telling you, I mean, they come back and they give a sticker price that it's going to cost $105 a unit of insurance per month.
Oh yeah, and that's a tremendously large, insane amount.
Oh, it's insane. I mean, it's their rents are $700, and they're going to have $100 of insurance. I mean, and they can't afford it. So now they've got this entire thing. Because it's an HOA, there's people on the board who weren't paying attention, and they're getting sued because there's a directors and officers fiduciary responsibility. And there's chaos.
You know what? Sometimes, it doesn't pay to be on those boards. But I will tell you, if you are an owner in one of those units there, whether you own or occupied or you're an investor, it would serve you good notice to go ahead and check annually. Has the board paid the homeowners the insurance premiums? Are they paid in full? How do they pay them?
Well, I've got 2 townhomes down in Fountain, and we just changed insurance companies down there. I mean, I don't insure where I have places specifically, so I'm not having a conflict of interest. But I just got the email and I went through the policy, and they've changed the deductible. So I had to call my insurance agent, which happens to be my staff, and I walked next door to Diane, who you've met, who's phenomenal, and said, hey, deductible's gone up. We probably need to handle this assessment portion, and she fixed it in about 2 seconds. But if I hadn't paid attention or read it, I would have had a $10,000 assessment, which was the deductible before. Now it's $50,000. I could have had a $40,000 hit.
Mm-hmm. That's right, and that's a really good point. These assessments here, you can have a lot of assessments by an HOA for improvements that basically the HOA doesn't have the money to pay for. They have to borrow the money, and so therefore they go ahead and assess all the property owners. And having been in this business 30 plus years now, that's what I'm saying. I don't like to say the exact number anymore. I figure 30 is enough. But anyway, I have seen these assessments total as much as $20,000-$25,000 at a given time on a property there. And it's because they were either underinsured, didn't have the premium paid, some sort of deal,
or had a gap in coverage they didn't pay attention to.
And you have to understand too, a lot of times these members of the boards of directors are kind of volunteer, but they have fiduciary or obligations, legal obligations for oversight and management of the HOA. So that's really important. If you're looking at buying one, make sure you buy a townhome or a condo. Make sure you explore the minutes, the rules and regulations, the bylaws, the financial data, including the budget and the balance sheet. A lot of times people tend to overlook that. I make it a course of my policy in my practice to make sure that any client of mine gets all of those documents to review. But then I take it a step further, and I would actually examine the records from the HOA to find out when did they actually pay the insurance premium, was it paid, what's the deductible, and match it up with what's in their coffers.
Well, I mean, think about it. You've got an assessment typically on a monthly basis for HOA maintenance, grass, lawns, painting, all that kind of stuff.
Right.
If you look at the balance sheet on there, if their insurance is $100 and the cleaning's $50 and this is $20 and this is $30 and it all adds up, and it comes up to $200 and they're only charging you $125. There's a problem. Typically, the associations do a pretty good job on that, and they put a portion into the reserves. They can get hit, though. I mean, in Colorado specifically, we have hail problems.
Right.
And the carriers are moving to 2% and 3% deductibles, and on these large complexes, that's hundreds and hundreds of thousands of dollars to replace your roof. In fact, basically, your roof is uninsured, is what's happened.
Yeah.
Because by the time you fix the entire roof, you're close to the deductible.
Yeah, absolutely, absolutely. Well, that's one of the reasons why the I believe it's the Colorado Real Estate Commission that went ahead and added an enforcement officer or position with regards to homeowner associations, because they were severely coming under attack, depleting their assets.
They are, and then there's an asset problem.
That is a huge liability, a huge asset problem. Then that just also means that it makes it harder for you to sell that asset and make money on real estate. So be sure you do your homework and make sure you get an agent that can help you do your homework with respect to that. Now, speaking of doing your homework when you're actually buying property, even a single family home, you need to have insurance. And one of the things I like to tell people, to do is to make sure they actually look at the coverages, not just the cost of a premium, but the coverages. Because when do you need insurance to come into play?
Well, you need it for catastrophes.
You need it for a
That's
claim?
really what it is,
Yeah.
right? Catastrophe claim. Your insurance is to mitigate catastrophe.
Right.
It is not a maintenance program.
Right. It's not a maintenance program.
And that's what people do all the time. In fact, we just had a homeowner come to us who's had 4 claims, of which 3 of them are 0 payout and 1 is $500 payout. He's been filing it because his roof is old and he wants to get a new roof. That's fine, but his insurance company has now canceled him. And nobody wants him, and he's going to end up in the specialty markets when he's going to go from $800 to $4,000 or $5,000 a year, and you don't have a choice because you have a mortgage. I mean, and that's an expensive maintenance program, assuming you didn't get your roof replaced.
Absolutely, absolutely. Well, we've got so much more to share with you on the Springs Radio Real Estate Show, so you want to stay tuned to us here. Get out your paper and pencils. I've got a couple of properties I am going to share with you that are just outstanding and great opportunities. So stay tuned. And